Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. So right now, the metals, gold and silver, their prices are sort of just in a holding pattern. It's kind of a slow news cycle right now for the metals. At least that's what it seems like from my perspective. So today, I want to go ahead and discuss some of the potential effects of the rising inflation and the economic decline that we are witnessing beyond just the prices of the metals and the various assets. Starting off with this report from Rasmussen, the polling agency, which reveals that now Americans, more likely than not, seem to believe that there is some form of significant civil disorder on the way. In fact, according to this recent poll, 41% of those polled in the U.S. believe that the United States is likely to experience a second civil war sometime in the next 5 years. Clearly the idea of civil disorder, of major problems, is sort of entering the zeitgeist. And we will talk a bit about metals today, but I really want to talk about this risk of broader societal decline, broader unrest as a result of what we are witnessing in the economy. Taking a look at the chart of silver, you can see, as I mentioned, kind of just a holding pattern, waiting for the next shoe to drop, more news to hit the presses, and I do think that is coming. Certainly more inflation is on the way, and let's talk about how the inflation is affecting consumers. So recently, there was some news that consumer staples like Starbucks, KFC, and McDonald's are claiming now that same-store sales have declined in the first quarter. Now, this is as a result of rising prices and a consumer that is coming increasingly under pressure as a result of the declining purchasing power of the dollar. Now, in and of itself, this would be bad, right? The declining purchasing power, a consumer now who is having a hard time eating out even at inexpensive fast food places. And, the chat has nobody participating in it right now. So do me a favor, if you're watching, just put a 1 or a hello or something in the chat so I can make sure I'm not just talking to a void here. But this is a big problem, right? When people can't afford the basics, when people begin to feel the pressure when it comes to just feeding their families, getting groceries, getting an inexpensive meal out, when Americans are giving up their coffee. I know that may seem petty, but this, again, you have a very soft American population, a very entitled American population, and they're going to be pretty upset when they can't go ahead and pick up a coffee at Starbucks anymore. Going to the household debt report here from the New York Fed. Now, this came out several months ago. We're going to get a new report on May 20th, but this is for the fourth quarter of 2023, and I'm sure that the report that we get in just a few days is going to reveal that this situation is becoming much worse. But, just look at the staggering amount of debt that consumers are now experiencing, right? It is on the rise. Record high credit card debt, record high debts of all forms throughout this economy. And, that's really the big problem here, because the Federal Reserve, ostensibly, they're the ones who are supposed to be fighting inflation here by elevating interest rates and maintaining higher rates for longer. But this is really the reason that they can't do this. Thank you, everybody in the chat there. Welcome to the live stream. Sometimes when I cover these other topics, the videos don't get as many views as when we stick to just gold and silver and breaking news. But I think this is important, right? The fact that we may be headed for significant civil unrest as a result of the declining economy in the United States. Because one thing that happens when the economy declines is the basic fabric of society can unwind along with it, right? When people can't buy food, when they have a hard time affording rent, when they become homeless, and we know homelessness is on the rise in a big way, it can lead to significant social problems. Just look at the Arab Spring, from over a decade ago now. That major upheaval that went through the Middle East and changed the basic political foundations of certain countries in the Middle East, a large part of that, some of that may have been orchestrated by intelligence agencies. There might have been more to that than met the eye, but a lot of the groundwork that was laid for that had to do with rising food prices and elevated food prices. And people, when they can't afford food, that's when they start heading to the streets. Right now, we're witnessing significant civil unrest already around university campuses in the United States, protesting the war going on in Gaza. And I think that what we're seeing right now is really just a preview of what is to come as inflation heats up. Summertime is when you tend to see unrest in a big way. You remember in 2020, that summer was a very hot summer in terms of not just temperatures, but also sentiments, protests, riots in some cases. And I think that this summer very likely is going to be a repeat of that. As inflation heats up, this backdrop of civil unrest is going to get much worse. Here's an interesting story. This is an economic one, but it kind of highlights the problem, right? This is from Bloomberg. It says at $2 million per minute, treasuries mint cash like never before. Now, this story actually, the $2 million per minute, first of all, to reference that, what they're referring to is the interest that is being paid on the national debt. So right now, interest cost on the national debt, $2 million per minute. I mean, wrap your head around that. That's pretty incredible. But they put this very positive spin on it in this Bloomberg article, saying that now treasuries have gone back to being a source of income that investors can lock in and rely on year after year for years to come, regardless of where yields are at any given moment. Because, of course, for a decade plus, interest rates on U.S. treasuries were held very close to zero by the Federal Reserve. Now, we're reaping the benefits of that in the form of skyrocketing inflation. And here's the thing. I mean, right now, you can go out and buy treasuries and you can earn some income on them. Right now, the amount of cash that is in money market accounts, which derive their yield largely from U.S. treasuries, is near record highs. I think it's something like $6 trillion that are in the money market accounts right now. But I mean, how reliable are these going to be as a source of income when inflation begins to shoot up? Sure, you can earn 5% maybe on a short-term treasury, but I mean, real inflation, if it's not already higher than that, it will be heading there very soon. And that's because all of this interest that is being paid on these U.S. treasuries, it's not like we're getting it via taxation. It's all being borrowed, right? All of this interest that is being paid on this debt is just contributing, piling on to the enormous pile of U.S. national debt that is growing. And this is going to lead to higher inflation. And the thing is that the only way that the Federal Reserve is going to be able to intervene here and solve this problem of skyrocketing yields during inflation, they're going to have to buy up all the debt, right? Because as inflation moves higher, yields have to move higher to compensate for that. If, let's just say, for example, inflation is at 6%, and you buy a treasury yielding 5%, well, that's a guaranteed loss of 1%, so that's not going to work for investors. So the yield on these is going to have to continue moving higher. That's going to be a huge problem for banks, for example, who are sitting on giant piles of low-yielding debt. Every time the yield goes up, they have bigger losses on their books. It's going to be a huge problem for the federal government, who, as the economy declines, their tax receipts are going to go down, the interest is going to move higher. I mean, eventually they're going to have to do something to fix this. And the only thing the Federal Reserve is going to be able to do is to buy up debt, right? Become the sole buyer of U.S. debt. Just to give an idea of how bad this problem is, again, look at this chart. The Fed doesn't ease policy by December, we're going to be looking at an interest cost of $1.6 trillion by the end of this year, moving much higher. And that is going to mean that inflation ultimately is destined to run out of control. And as inflation moves higher, we are going to see a U.S. consumer that absolutely loses all ability to support their lifestyle. I mean, that's what you have to understand, is that we're heading to a situation where skyrocketing inflation is going to make, forget a Starbucks cup of coffee. People are not going to be able to afford groceries, right? What's going to happen to the fabric of society when a week's worth of groceries for a small family is $1,000, right? When a gallon of gasoline is $15, people are going to be heading to the streets. And so, you need to be preparing for the inflation, certainly. If you want to do that, you know what I think. Hard assets are the way to go. Right now, SD Bullion, today's video sponsor, they've got a sale going on half dollars. You can load up on some of those if you are in the market to protect yourself from inflation. It's not financial advice, just telling you what I've been doing. But look, right now we are witnessing a breakdown of society in its nascent forms, right? We're seeing these protests on campuses. Yeah, some of these are being funded. Some of them are probably organic. Yeah, someone says BLM riots 2.0 in the chat there. Exactly, except expect this round to be much worse, because the inflation that is in the pipe is so much worse than what we are being told, right? The cost of living is about to skyrocket. And, that's frightening, because it's certainly, you want to be able to afford your house, you want to be able to afford to eat, but also it's like that's going to be happening at the same time that many of the things we take for granted, like living in a lawful civil society, is going to be breaking down. Just look at other instances of hyperinflation. Look at what happened in Venezuela during their hyperinflation. You had militarized police with armored trucks basically plowing down protesters, trying to quell the unrest. And, when things are breaking down like that, just having silver isn't going to be enough. Having gold isn't going to be enough. Even if you're insulated from the worst effects of inflation, if you can't get to the store because there's rioters in the streets, well, one of the things you might want to think about here is if you're in a very densely populated area, you might want to think about moving away from there, right? Or at least having a plan to get away from there if you need to get out of major cities, if you need to get out of densely populated areas. Those are going to be a big problem. Another thing I wanted to talk about today is, so crude oil has been heading lower recently. We've seen this kind of draw down from the highs of the attack on Israel via Iran, the anticipated response. That all turned out to be, at least for the time being, something of a nothing burger. You've seen the price of oil come down. There was news reporting that a Hamas ceasefire, Hamas had accepted a ceasefire between them and Israel. That also turned out to perhaps be false, but we did see a pullback in the price of crude oil with the thought of reduced tensions in the Middle East, right? But it looks like that maybe is about to reverse. I don't think we're going to get a break from inflation on the energy front. In fact, it looks like this may be heading higher once again soon. We have Israel seizing the Rafah crossing. There is this anticipated assault on Rafah, which looks like it may be about to play out, the city in southern Gaza. The U.S. is saying here, according to this headline from AP, that it isn't the full invasion that many fear. Of course, the U.S. coming under increasing pressure because of these protests domestically, increasingly an unpopular war, and you can kind of understand why when you see the images coming out of the Middle East. Now, I'm not taking a stance on this, I'm trying to remain objective, but look, this conflict is continuing to worsen, and it's very likely that the Middle East, it's not going to be all peace and rainbows there anytime soon. So you can expect the price of crude oil to head back up once this really begins to play out. And like I said, right now, we're kind of in a holding pattern. You've got gold and silver today basically flat. You have got markets kind of waiting to see what happens here. Is the Federal Reserve going to ease policy? I think it's inevitable. Again, all you have to do is look at the surging cost of interest on all these various types of debt. The U.S. consumer with record amounts of credit card debt, soaring interest cost. And, one of the things also I want to mention here is that the Federal Reserve Really, they need to hike rates if they want to get inflation under control. That would be the right move, right? Higher rates. Clearly, rates are not high enough. And one of the reasons that hiking rates is supposed to bring down inflation is that inflation is the expansion of the money supply. It's also the expansion of credit, right? Because when you go to the store and you buy food, it doesn't matter whether you're buying it with a credit card or whether you're buying it with cash that you saved, right? It's all inflationary. It all bids up the price of scarce resources. So you continue to see debts expand despite the fact that interest rates are higher. The Federal Reserve has not raised rates to a point where it has incentivized borrowers to stop their borrowing, right? It has increased the debt service cost of all of that debt. You have consumers now with credit cards, they're paying, the highest rates on record. Some of these credit cards, the interest rate is over 20%. And yet still, U.S. consumers are borrowing. That's because they can't afford to make ends meet without adding more debt. But the Federal Reserve cannot hike rates further. We just go back to this chart, right? There's no way. If they don't cut rates, we're going to see an exponential growth in the debt service cost of the U.S. national debt. Not to mention what's going to happen to consumers. And, they need to add relief to multiple sectors of this debt-addicted economy. What happens if consumers begin defaulting on all of this debt that they've racked up? That's another source of losses for the banks. All of this has to be papered over. And the sad thing is that, really, we're in a situation now where the Federal Reserve is backed into a corner. They either ease and they buy a little bit of time, but they massively devalue the dollar, or they keep rates where they're at. Maybe they hike. I don't know. Who knows what they'll try to do. It's a difficult situation for them. But this is the predictable outcome of all of the Fed manipulation of the economy over the past decade plus, since the great financial crisis, right? You can live on borrowed money and you can do that for a while. It's just like an individual, right? Like if you go out and you just have a credit card that you're putting all of your expenses on and you're living beyond your means for a decade, well, eventually you're going to default or you're going to have to impose austerity on yourself. And we know politicians are not going to impose austerity on the American people, right? There's no way that that's a politically viable mechanism. For one thing, the average American has no clue about what is happening in the economy. And that's, not an accident. That's on purpose. We've all been deceived into the real nature of inflation. They've gone so far as to redefine the word in the dictionary. So, there's clearly a psyop on Americans to brainwash us into thinking that the Federal Reserve is there to help us, that manipulating interest rates, artificially lowering interest rates is great for the economy. Everybody thinks this, that they don't understand that the inevitable consequence of this is an economic crisis, is a collapse. It's either a default or a hyperinflation, because when you get debt to the level that we have it at $34.7 trillion and growing rapidly, we got a $2 trillion plus deficit that we're running. The only way you can pay that debt off is to default on it, which every time that the U.S. debt ceiling comes up, we know exactly how dangerous a default would be. Janet Yellen has let us know it'd basically be the end of the world, right? And a default would probably be the honest, correct solution at this point. But yeah, we would have to deal with a lot of austerity. There wouldn't be all of these government benefits. They would have to cut spending drastically. People wouldn't loan us money any longer because clearly we wouldn't be able to repay it. Rates would shoot up. Asset values would decline massively, and people would understandably be upset about that. Of course, they've elected the politicians that have done this from both parties for who knows how long. The past 50 years since the dollar was taken off of gold by Richard Nixon temporarily. But the other option is that they keep this thing going by cutting rates, by stimulating, by pumping cash into the market, and that's what's going to happen. Especially when people get really pissed off and they take to the streets because, they've been lied to and they're going to realize that. That's when the anti-riot money is going to be dropped from helicopters. They expect stimulus, expect UBI. Maybe they'll launch a CBDC to try to, tell everybody, look, we got this solution for your problem. But that, of course, is just going to make the problems worse. So, you need to be getting prepared for this on multiple levels, right? You need to be getting ready for a breakdown in society, in, the things that we kind of take for granted here. You got to understand that rule of law and civil society and what we've enjoyed in America for a long time now. I mean, clearly it hasn't been perfect. Obviously, over the U.S. history, there's been a lot of problems, but it's been a lot better than what people have experienced throughout history. But this is sort of the exception, not the rule. The rule is plutocracy, oligarchy, the people at the top having the vast majority of the resources. And that's what we are heading back towards, unfortunately, at least from my point of view. So, look, you got to get prepared. You get hard assets. You get out of the digital financial system to the extent that you can. If you are there, make sure you're hedging with, inflation-proof assets, commodities, companies that produce commodities, consumer staples, maybe foreign stocks that, earn money in currencies that won't be devalued as much. Going back to this Civil War thing before we wrap things up, there's this poll by Rasmussen's that people are anticipating a civil war. Did anybody see the Civil War movie that came out recently? Put a 2 in the chat if you caught that movie. I did. And I thought actually, my take was it was a pretty decent film. I thought they did a good job of not wrapping too much of today's political division in there and remaining relatively neutral on that front. But there was a scene in the movie where they go to buy gas. It's this group of journalists. I'm not going to give you any spoilers here, I don't think, if you haven't seen it. But they're a group of journalists, and they're trying to go to Washington to view the culmination of the Civil War, and they have to stop to get gas. And they offer $300 for gas, and the guy at the gas station just kind of laughs at them. But then they mention that it's $300 Canadian. And I mean, I was probably the only person in the theater who laughed when that line was delivered. But the guy's eyes light up at $300 Canadian, and he gives him gas for that. But it's true. If we do devolve into a civil war or a civil crisis like this, if there is massive civil unrest, you can expect that massive inflation will be following that very shortly. So, hopefully something like this doesn't come to pass. It's in the zeitgeist, though, and you wonder how much of this, like with this Civil War movie and stuff, is predictive programming, or how much of it is just a reflection of what is occurring in our society right now. If you went back 5 years, what do you think people would have responded to this poll? I mean, I would think that 5 years ago, the possibility of a civil war would be a complete, less than 1% outlier. I still view this as a, highly unlikely event, but, probably more than 1%, right? So, look, do what you can to get prepared. Do what you can to get out of densely populated areas. If you do live there, you have to. I understand it's not within everybody's means to relocate, but maybe have a plan to get out of Dodge just in case things do get kind of spicy over the summer, and understand that this problem is likely going to get much worse before it gets any better. So anyway, I hope that this live stream was of interest to folks. I know that we, kind of slightly divergent from the normal topics, but this is a real risk, and I think it's something that we need to get prepared for. So yeah, $27 silver is a joke. I agree with you, Gypsy Tree. I just want to say a big thanks to everybody who enjoyed this video. Yeah, someone says I'm a doomer in the chat. Well, look, I try to just call it as I see it. I'm not trying to be a doomer, but, when doom is on the horizon, maybe that's the right approach to take. So anyway, yeah, get your gardens in. That's right. Yeah, maybe consider planting a garden. Get independent of the systems of support that we all rely on. But anyway, thanks for watching, everybody. Stay safe out there. Happy stacking. Don't forget to share the video. Smash that like button. And let me know what you think in the comments down below. I'll catch you next time. Smart